Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to go over the new risk analysis tool on the dashboard. We're excited to show you the powerful capabilities for analyzing a trade as well as your entire portfolio risk. Matt, do you want to share a screen and get us started?
Yeah, absolutely. It's a big day for ORATS, Tyler. Another big day. Um,
I'm excited.
yeah. So yeah, let's just back up and figure out like what we're talking about. So it's really two things. It's one, how do you look at the risk of your overall position? I mean, looking at one position, you could see max gain and max loss, and you could look at one position. But when you have a bunch of positions, how do you organize them and combine them to see what your kind of overall risk is? Because unless you know which, do you really want to have that as your edge? Trying to pick, which way the market's going, or do you want to hopefully use all you've learned at ORATS in order to get that going? So we hope for the latter. And so this risk profile helps to show you, do you have long, or is your position really long, or is it really short, or do you have long gamma, or do you have long theta? Do you have short theta? Are you collecting money, or are you not? So that's the first thing. So you get that. That's awesome. Like, so we've come up with a way that we'll get into to combine different symbols. Secondly, we have now a way to kind of look at individual trades and see what your risk is, which you could see out there on the internet. But what ORATS has is a very good method for simulating what the volatility might be. So that's really cool. So that's what I'd like to get into today, Tyler.
Yeah, it's very exciting. We've been working on this for a few months, and we're excited to show everybody. It's definitely been something we've heard from customers, so we appreciate your feedback, and we always welcome your feedback on all of our tools, including the dashboard and the APIs and the data quality and all that. So
Yeah,
this is for you guys, and we're excited to show you.
yeah, good point. So my dog just came in. So yeah, let's get into this. So let's start with the risk profile. Kind of monitoring, because that's the first thing I do. I want to see how my delta is. It shows me like long 5 delta, and I'm paying a fair amount of theta this morning. This is my Tradier account that it's all SPX. So we'll start with a relatively easy one. So I have a couple 1x2 back spreads, and then I have a put diagonal in there. I'm getting money for the put diagonal, and I'm paying out for the back spreads. So let's check that out. So all you have to do is click on the risk profile. We have Apple as the default. We'll change that to probably SPY soon, but you could set that any symbol as your base risk symbol. So I'll set that to SPY or SPX. So let's look at what we're looking at here. So there's trade analysis, but we're on portfolio analysis. So portfolio analysis is going to look at all of your symbols and mark those symbols. So in this one, like I said, we only have SPX. So that's the only one there. And then so what we do is we combine these, and so there we see the delta of 7.2 and 249. So far so good there, Tyler.
Yeah, it's really interesting. Let's go over those big distribution nodes that we see in there and what that means.
Great. Okay, so these distribution nodes, and we try to say it, portfolio profit is the sum of the P&Ls for each ticker's distribution. So let's talk about that. So we make a distribution of outcomes. It's like a normal distribution, but it's actual for looking back on SPX, for 18 years, and we adjust a little for implied volatility. As if it's a very high volatility time, we kind of adjust where the bucket is that we place the move into. So then we get this kind of normal distribution. So 14% of the time, this is a 3-day distribution. So we look out 3 days, look out 3 days, look out 3 days, look out 3 days, put them in a bucket, put them in a bucket. So you can see like going down, this is 3 standard deviations. It's happened 1% of the time. So 1 of every 100, you'll go down here, and you can see that going up, it rarely, if ever, happens that much. So you have this, distribution that this is a kind of a typical market-wide distribution. You're going up just a little bit, 13.6, 11.7. You don't go down as much, but when you go down bigger. This is the typical kind of equity distribution. So far, so good, Tyler?
Yeah, so when most people look at a payoff diagram like this, they're looking at expiration as the sort of final value. But this is a little different, right? So we're looking at 3 days out. So everything that you're looking at in the portfolio analysis is 3 days out. And we're looking at 3 standard deviations of the underlying move. In this case, it's SPX for 3 days out.
Yeah, you bring up some good points. So why not 1 day, and then why not the actual expirations? Like those might be some questions. So, why not 1 day? Well, we want a larger distribution. So we want to see where our positions are over a wider distribution. And, just by my experience, I figured 3 days is good. Why not the expirations? Well, you're going to have, these are 0 DTEs, but we're going to have a bunch of different distributions out there, expirations out there. So if we look at each trade at the profit in 3 days, then you could combine them together. So this is just one symbol, SPX. And so it's relatively easy to do that. So you just kind of dump all of the profits that we see, and I could go back and kind of look at my positions and I can look at one of the let's look at the 1 by 2. So 1 by 2, you could see the little distribution here, and I guess I'll stop teasing it, Tyler. I'll show the actual, like the bigger one. So now we've made this into I could say view and risk profile, and then I could see people have been asking us for this for a while, but this is the actual trade in a larger graph, and so we have what the profit is here. So there's a loss here at expiration, but expiration in this case is out 5 days. You could see like these 5D and 1215. So what we're going to do is we're going to add this kind of gray line, but the gray line is for today. So we're going to calculate a gray line for 3 days, and then we could add all the positions together, and we added at each node. So you could tell that this node is somewhat different than the 3-day node. I know, is that a little bit, is that clear, or is that making it worse, Tyler?
No, it's clear. There's just a lot to kind of unpack there.
Right.
So let's just keep going over it, and it'll make more sense as we go through it.
All right. So, I have 2 of these positions, and now so this dark position is the profit over the 3 standard deviations down, 3 standard deviations up.
So you can kind of, it represents the theoretical value today, right? And that's on the trade analysis tab of the risk profile. You see that in sort of the gray line, and that's the same theoretical value line you would see in other payoff diagrams in other platforms, right?
Yeah, but I like to say profit because
Okay.
people don't get theoretical value. So it's likely profit of the whole position if the market goes to one of these nodes, and you can see the prices here. And then again, what we're going to show is that then doing it with this methodology, you could then combine other symbols and then pile them on, and then you can see your overall position. The assumption is that they'll move down in standard deviation form down through their nodes. So that's the
Mhm.
assumption.
Got it. Okay.
So yeah, so you can see the profit. I'm paying, so I'm gonna, it's a back spread, meaning you're gonna make money if big things happen, right? And so uh, we could graph the delta. That's relatively easy because delta you could use with profit. We could graph the theta. Vega is harder to graph over a portfolio because there are different types of IVs. We could probably take a shot at it, Tyler, but we're putting this out there. It's kind of a soft launch for people right now to get feedback. So we could see how so theta is in red. You can see how theta is negative now, and it gets more negative as the position goes down. I have a lot of strikes down here, so that's why I'm making money. So it's going to cost me more per day, but I'm going to get a lot of profit on the position. And then my theta is not as bad up here, and and my delta right now is pretty flat, 6 deltas long. So that's the easy one. So if you're okay with this, Tyler, I'd like to go to a position that's a lot more difficult to imagine, and but I'll tell you why this is so important when we get there.
Yeah. I mean, let's do it. This is where the tool really shines,
Right.
right?
So I have Tradier, I have other brokers, but I also have ORATS paper trading. And then this is my ORATS paper trading that I have in auto trading. We haven't released that yet, but that's really cool. So I have a lot of positions on. So I'm just going to, testing out our auto trading in paper trading right now. And so you can see that I have a ton of different positions. And
And all different symbols too, right? So this is a
right.
really critical part here, right?
Yeah, so all different and I have a long call spread and a short put spread in Abgo and Broadcom, and I have just positions all over the place, all different days. 158 days down to 18 days or whatever. So like, how do you know like what your delta is? Like, I know my delta is for each stock, and but you can't really add up your deltas for each thing because like EEM doesn't move that much. So a delta in EDM, I'm not real worried about it. I mean, look at the max loss and max gain for 56, for 56 deltas. It's, you can't really compare, you can't add deltas, right?
I mean,
Typically,
just looking at this at a glance, you don't know if you're long the market or short the market, if you're excited if the market goes up or you're sad.
exactly.
Like,
Yeah. Like,
you don't know.
so what do you do? Like the market today is kind of mixed, right? So like SPY's flat, but like Tesla's up, XLE's up. Um, EWZ, the foreign are down, but like how do you know? So what we've done is we said, okay, well we could add up um, all these positions over a 3-day period by adding up the various nodes. So let's just hop to the answer. So the answer is in this position, I'm I'm slightly short, and I'm paying out a small amount of theta. What's 44F? I don't know what that is. It's probably just not showing. It's 445 or whatever. So my delta's flat, which is great. I know it's flat because I try to manage my exposure, delta exposure, and my theta, I'm paying out a little bit, which I always kind of like to do. And my theta gets less negative as it goes up, which, the volatility comes in. So I like these types of overall positions for my auto trading.
Yeah,
So
so yeah, it's really neat, and I just want to explain that what we're doing is, you might wonder still, like, okay, how are you standardizing all of these symbols, right? And
yeah,
we're standardizing it through the one, the two, the three standard deviation moves of the stock, using each individual stock's distribution. And right now, you only see the distribution for the underlying that you're showing here, which is SPX.
yeah, the
But
base symbol that you could change, but yeah, you're right.
right. But that profit and loss line, that thick blue line that you're seeing there, is a sum of all of the theoretical values, or as you like to call them, the profits, of each individual ticker's sort of standard deviation move.
Yeah, well said. So I could see, so if the market goes up from 6874 to 6901, my profit that we're estimating there is $25, right? So that is of the entire position. Maybe I have 50 positions on. So otherwise, if I didn't have that, I'd be like I was kind of estimating in my head, just looking at all these positions that I have on. I'm like, short there, short there, short there, but there's some longs that are in bigger stocks, Broadcom and Home Depot. So it's hard to do. Now, let's talk about some of the drawbacks. The drawbacks are, our assumptions are that all these are going to move together. Well,
Right.
yeah. So you don't have to do it that way. So I could say, well, I could break it out, right? I could break it out in, like, let's just do let's just do EEM and EEZ, right? Like I could go to the risk profile with that. In terms of EWZ, I could then like select none, and then I could go to EEM, just select EEM and EWZ, and I could see that, well, shoot, and I'm really short in the foreign symbols, EEM, EWZ, and they do, So later we'll get into more correlations and doing stuff like that, but
Like beta weighting and that kind of
yeah,
stuff.
right, and beta weighting and correlations, like I would want to group these by, you know, okay, so I see EEM and EWZ, but maybe I want to look at just XLE and I don't know if there's anything else really XLE, or maybe diamonds, more industrial type things, right? So like, how am I in that? So I'm short. So and this is in terms of EWZ. It doesn't really matter because we just kind of add up by the nodes, but you can always change that.
The underlying symbol is more for if you wanted to see a more concrete example, like, okay, if the stock goes to exactly this price,
Right.
then what it would be, because the underlying and the nodes show you the actual price that it would go to over a half a standard deviation or one or two standard deviation move. That's really kind of all that is useful for,
Okay.
and the delta too, right?
Yeah. So right now I'm just looking at kind of like, Palantir, the tech heavy, right? So XLK and PayPal and Palantir and Broadcom. So I could just say, so how am I looking there? So then you could kind of say, well, I'm short gamma because I'm long theta, and slightly long delta. So if I wanted to try to, repair or hedge this type of positions, you could select those types of stocks that move together. A more concrete example would be something like gold and silver. So the precious metals don't move like the SPY, or VIX. If you have some VIX type stocks, VXX and VIX, they're going to move opposite. So you want to analyze those together. So we've made ways to allow you to do that. So this is, like totally killer in how you can now start to understand, why did I make money today, or why did I lose money today? Well, you could see it a lot better in this type of risk profile analysis that we put together.
I mean, as a retail trader, this feels like I'm getting uh, unreleased access to some sort of tool from like a hedge fund on Wall Street. Like this
Yeah.
what it feels like when I'm looking at this.
Well, yeah, I mean, like I used to be a market maker. Actually, I have a picture, so I'll tell you a quick story. Can you see that? I can't tell.
Barely, yeah.
Anyway, that's it. Back when I was a market maker, a little younger. Quick story. We used to wear ties and hang them up, and then my wife would give me a tie every year, and so I'd swap out my tie each year. Same with this shirt. This shirt only has a couple more shows left, then we get a new shirt for the next year, Tyler.
All right.
But like we love stuff like this. Like, so I could monitor like my whole firm, like how am I looking? So we made tools like this, back in the day for my trading company. I had 14 traders that I backed, and then I was a market maker on the floor too. So it gets very important because you don't want to come in with the market down 2% and find out you're down a couple $100,000. You need to watch all that, and we would watch it very closely because it was my money. We didn't have a big company behind it. So this is the genesis of this tool, is the ability to then overlay similar stocks to see what your risk is, and you want to manage your risk in each sector because yesterday I have SMH, which is the semiconductors, and China said something beneficial to the semiconductors and they went way up, but the market was down. So you have to kind of manage in subsectors, but also manage overall. So this is what this allows you to do by looking at various symbols that you can click on together.
It's very neat. So we have a few more minutes. Do you want to go over the trade analysis side of this and kind of the cool features that we've added there, including kind of assembling a position with the clicking it in the quadrants? You can adjust the IV term structure. You can quickly change the strategy, and as well as zooming and dragging and all those kind of things that you couldn't do before in the risk profile.
Yeah, definitely. Yeah, so you could change how much time. So now I could see that this is a calendar, right? So I could see like, what if this vol comes down? So like, well, that's good for me because I think that vol is kind of high. The reason I'm putting the calendar on, my profit is more, if with this position, and what if like this one goes up, right? So that's what I want, for a calendar. So this is really great, especially for earnings traders. You could start to see, like, if I type in Apple, I could start to put positions together, for put calendar or whatever. I could put positions on for earnings, and then I could say, well, what if earnings flip and do this, or what if my vol, what if vol goes up, or if vol crashes down for both, what's my profit like? So you could start to, and then you could move out the days, like, okay, earnings is in 7 days or whatever. So then I could see what my position's going to be, and you could add more positions too. Click to buy a put, click to buy a call. So I'll buy a call up here, and then you could slide that if you want, and then or you can add you could sell a call, and you could sell it at a different expiration if you want. So there's a lot that you could do with this particular tool. Sliding the days, doing all this stuff, and you get some pretty wacky looking things, but and then you could change, volatilities for each one, like, so you got, a ton of, and you could close it very easily. You could, puts are down here, but you could still, buy a put and, slide it wherever you want. So, anyway, it is just a killer tool for analyzing a position. And then you could see, what your Greeks are, and it shows you, but you could then see your delta changes over the slide, over the if the stock changes. I think did I get all the stuff? That was quick.
Yeah, I mean, it's a lot of stuff. Zooming and dragging on the graph, I think, is pretty fun. If you want to see more, get more in there, or whatever.
And then this too, zoom in here, and
yeah,
you can see the whole term structure and where the stock's been and where your strikes are. That's really.
You can even resize that graph and drag it around. So if you want to look at on the bottom right is the resize.
Oh, yeah.
I'm gonna have to make it a little easier for your computer. Well, anyway. Yeah. But yeah, it's a great tool. I think this is something a lot of people have asked for, and the ability to adjust the IVs for individual legs is something not a lot of people have. So that's a great feature, and just seeing this full screen.
In modeling the IV with earnings or without earnings, like you're smoothing them out, and what would happen if the vols smooth out. I mean, that's really killer. And then be able to bring up a lot of different templates, bullish or bearish or neutral, and be able to see those really quickly. Type in different stocks, and it's just a very powerful tool. We look forward for people to start using it and give us feedback. I mean, it's for you guys. So let us know, how you like it. If we could add anything, if we could change anything, if it's working for you, if it's not working, we want to know about it. We get back very quickly. We pride ourselves, we have 3 people working on support all the time. And, for our customer base, it seems to work out. So great job, Tyler. I know that you've done a lot on this. So
thanks.
Yeah, it looks awesome.
Cool. Yeah. Well, thanks for demonstrating it today. And, we're excited to hear your feedback. It's, what'd you say it's coming up? So we're working on like the correlations and the beta weighting and the risk profile. So you guys have that to look forward to. And then you kind of teased out the auto trading a little bit too.
Yeah. I mean, this is how I'm getting a lot of positions on and managing it. And then, going to the trade journal and checking it all out. So this is we like to tease things out. So this isn't that far off, Tyler. This, the auto trading to, see which types of trades work for you. It's a whole thing. We'll do a whole show on this, but here's the auto trading icon in the back test. I say back test, I could, I could trade them or not trade them. I've optimized them, but that's a whole show, Tyler.
Well, yeah, lots to look forward to coming out from ORATS, and stuff that you can test today. So the risk profile, you guys can test out today, and it just got released. So yeah, let us know your feedback, and we're excited to hear it. We're excited to continue to show you guys all the cool stuff we're working on.
Yeah.
All right. Thanks, Matt. And thank you, Tradier, for hosting. If you guys have any questions, please email us at support@orats.com or leave a comment. You can also ask our AI chat agent named Otto in the top right corner of the dashboard or the website. Otto is very helpful and is trained on a lot of ORATS information. So go to Otto first. If it's wrong or you have any additional questions, definitely let us know. Cool. All right. Thank you for watching, and we'll see you guys again next week.
Thanks, sir.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.